Good morning, good afternoon, and good evening. It's another Sunday, 4:30 p.m., March 3rd. Oh, we're at March. This is Mark,
And this is Wawi Santos.
and welcome to the latest episode of Mark You and Wawi Show. Just a disclosure, we are not a registered financial planner. We're both healthcare professional workers here in the US, investing our hard-earned money in the stock market. We share our passionate research for stocks and market events to help us guide in our investment journey. So, on our latest episode, 102, is it Year of the Bull? We'll find
It's
out.
Year of the Dragon.
Yeah, it's definitely Year of the
Bull
Dragon.
and Dragon.
Mhm. And yeah, we're gonna take a look at the recent events in the stock market. So sentiments, we usually start with sentiments, what people are thinking about the stock market, if it's gonna go up or down in the next couple of weeks, couple of months. So we take a look at this on a weekly basis. AAII Sentiment Survey. Survey says there are a lot more investors that are thinking the stock market will go up, 46.5 compared to 44 last week, and a lot less investors thinking that the stock market would go down from 26 down to 21. So for the past 3 weeks, you could tell people are getting more bullish and less bearish. It's a clear trend since Valentine's Day. Let's see on the Fear and Greed Index. Oh, look at that. They have a new survey. They have a special question in the AAII. How are the November elections currently affecting your expectations for the stock market? Survey says 42 says making me more cautious. 36 says no impact. And 20% thinks making me more optimistic. Huh, that's a good survey to take a
Yeah,
look.
I think it's a good survey too.
Mhm.
But mostly after the election, the market feels stable because there's stability knowing the result of the election. And so it usually jumps back up after an election.
Mhm. Like a bounce.
A little bounce most of the time.
Mhm. So now we have the Fear and Greed Index. Currently, we are still on extreme greed. We're
I
at
know. This is
77
the
points.
second week.
Yeah, 77 points a week ago, and right now we are still at 77. And market momentum, wow, shooting up, distancing S&P 500 distancing itself from the 125-day moving average line. So this is as far as it can be since this year. Even a year
Hmm.
ago, look at that. It never, let's see. A year ago, the farthest it went was 4588 compared to 4190. So 4588 minus 4190, that's a difference of 398 points. And right now we are at 5137. So doing simple math, 46 difference between 4137 and 4605. That's 532 points away. Like a lot of difference right now, a lot of space between that. We're not saying that the stock market will fall anytime soon, but the market momentum plus the extreme greed and a lot of bullishness definitely indicates hello.
Hello, this is my mom. She's
So
saying
nice to meet
goodbye.
you.
Hello, viewers. That's my
Take
mom.
care. Take care po. So big difference from the 125-day moving average. The stock price strength, new 52-week highs, like me and Wawi have pointed out last week, it is still trending up, trending up. Some sort of support on the current bullishness of the overall stock market. It's some sort of plateauing, but it's still trending up on a week-to-week basis. The volume summation, the stock price breadth is definitely also improving. Put and call options still is going down a little bit. So not a whole lot of protection buying for the market. And the volatility, the VIX for the S&P is lower than the 50-day moving average. So definitely reflects a lot of bullishness in the overall market. For the 1 week performance, we're taking a look at the best performing sector is technology, followed by cyclicals, real estate, and basic materials. Energy, some sort of returns there for the past week. Worst performing is communication services. I bet this is Google mostly, since of their blunder in their AI Gemini. So I don't know. Some investors, big investors, and some analysts are calling for the CEO to actually step down if he can't make immediate changes to the AI. But they committed a big fumble there, and a lot of people are not um, you know, they're not quite convinced of the current progress that the Google is making. What do you think about the progress between Google and Microsoft, Huawei, with their OpenAI, Microsoft's OpenAI?
Well, that's a good question. I think Microsoft has a lead,
Hmm.
with ChatGPT. Uh, Google has Bard, right?
Bard, and then
And
they renamed it to Gemini, and then
and
they
now
renamed it to Gemma, but still a lot of errors came out with their, despite their expertise supposedly in the AI forefront.
well, I don't know what's happening with Google's team, so I think they just need to get it together.
Mhm.
But it's what's driving this market performance right now is all this AI hype. So, but all I know is, Google is still good with their ad revenues. So I don't know what's going on there if they haven't thought of a process to how to get ahead of this AI thing.
Mhm. Well,
So it's all about who's championing that role.
right. And it's still
Yeah.
unclear, like, what benefits does AI provide? Right now, Google is still like 90% market share in search, and
Mhm.
Bing, Microsoft's Bing, with ChatGPT, I don't know how much of a percentage that is, probably 1 or 2%, but they are making strides, believe it or not, in with their ChatGPT. And what's the guy's name? CEO, Microsoft CEO. He's Sundar Pichai, right? Sundar Pichai.
Pichai, yeah, Pichai.
He's all in OpenAI. Like he was willing to actually absorb all the workers from OpenAI when Sam Altman was kicked out for a couple of days before going back as CEO again. So a lot of drama right now with
Hmm.
AI. A lot of mistakes, a lot of things that need to work all together. So
And
the
only a few talents floating
mhm,
around.
the main winner right now is still Nvidia, and I bet SMCI, one of the he's
Yes.
SMCI is actually using Nvidia chips to build data centers. That's what I come to find out. So if Nvidia's chips are in demand, obviously they need to build data centers with those, and SMCI has the capability of doing such. So if you're gonna get chips from Nvidia, you better have SMCI to start working on them. Anyways,
Mhm.
so year to date, technology is the best performing sector. Are we seeing a bounce similar to last year? Because that was, yeah, last year technology bounced pretty hard, and right now it's there, doing the same thing since January, and then followed by healthcare and communication services. Utilities, I mean, look at that, Wowie. Last year was utilities was the worst performing sector, and right now it's turning out for the past couple months. Utilities again in the dumpster. I don't know, or
Mhm.
where's the fandom in utilities right now, despite the interest rate possible of pause.
Yeah, that's something that would be nice to dig deep into and see what's going on with utilities.
Mm-hmm.
Um,
Car,
um,
car utility sector.
mhm. But
So
we're seeing some inflows into energy, so maybe utilities will follow after that.
true. We'll find out because believe it or not, we're already in March. I mean, almost first quarter is almost done already. So before we jump on to Huawei's take, last data information we have as of March 1st about fund flows or where the money is going for the past week. It says here US money market again see big inflows ahead of inflation data. What? People are piling back to money market again after last year. So let's see. Investors were big buyers of money market in the 7 days leading to March to February 28th. They purchased 42.5 billion worth of money market, US money market, the largest weekly purchase since January 3rd. So a lot of money playing it safe right now, despite the sentiments turning out to be bullish. Um, Federal Reserve's preferred inflation gauge, which is the PCE, showed that the annual increase in inflation was the smallest in 3 years. So that's positive for us, meaning
Hmm.
inflation has been slowing down, really slowed down. 2.8, right, Wawi, in PCE?
I believe so. I
And they're
believe so.
targeting 2%. We're getting closer. Investors have been particularly anxious PCE data after higher expected in CPI. So anyways, US equity funds receive nearly 200 million in inflows after receiving nearly 5 billion, well, after having sold 5 billion the week prior. So some sort of flows, positive flows to the US, 200 million, not so much. Tech sector received 500 million worth of inflows after experiencing outflows a week before. Consumer discretionary and metals and mining also took in 262 and 236 million of inflows. Not a whole lot of inflows. I mean, in my opinion, I think a significant inflow should be about 1 billion or more. US growth funds receive 630 million after an outflow of 4 billion previously. Value funds had 450 million of outflows, second successive week of selling. So not much people are a big fan of value funds in contrast to growth funds. Bond funds stayed in demand 10 consecutive weeks, drawing net 1.9 billion of inflows. So Wawi and I have been observing this bond funds activity here. People are nonstop buying bond funds for some reason.
Yeah, exactly what they say here that US short intermediate investment grade funds are what's getting it.
Mhm. Yeah,
It's a protection, for it's still a cautious stance. They still have a cautious stance on the market.
true. So this is our latest indicator. The world, kind of like a world finance indicator here. 33 major categories worldwide are being monitored on this one. It's we will be including this survey. So we take a look at the week prior. So just basically we'll just look at the black line here. And honestly, it's been trending downwards compared to last week. So similar to week prior, it's also trending backwards. So we started a week ago negative 1.8, and now we are at negative 1.996, almost negative 2. So it means that financing has been looser for the past week, along with equity valuation, funding, volatility. Yes, volatility is down as we had just reviewed. So globally, it's a little bit more lax in terms of financing. And for the US, let's take remove emerging markets, and let's just focus on the US. For the past week, from negative 1.097, we're at negative 1.169. So definitely a lot looser in terms of financing. So a lot of altogether, collectively, surveys, indicators, market top indicators um, are flashing green right now. Like a lot of greed is piling in, and it's a lot looser economically speaking. So is this the top already that we're looking at? Not really, because if we're gonna look at back in 2021 when we were hitting similar to this, where all-time highs every other day. The indicator back then was between -4 and -3.2. And right now we are just negative 1.9, or let's just say 2. So there may still have some more room for upside for the overall market. Um, Even during pre-pandemic, the markets was negative 3.8. So it could definitely, there's more room to go for if you're looking at possible top at this point, despite the already crazy valuations, or not crazy. Nvidia's valuation is justifiable. It's like 30 times forward earnings, despite this tripling last year and 45 or 50% increase so far this year. So there may still be some more room to run for bullish investors. All right, so let's jump on Wawi's take. Wawi's take, what do you have for us for this week?
Well, before I tell you about the stocks and ETF I have in mind, my take today is bullish. I'm thinking there might be a surprise federal rate cut
Oh,
on the near horizon
mm-hmm.
uh, based on the incoming data. So, but don't take it as an investment advice. I just looking at the data, and so much of it is directed towards the bullish trend. So don't be surprised if they cut rates by April or May.
Mm-hmm. Oh, yeah.
Okay.
Looking at that you mentioned, let's just
Mm-hmm.
quick take a look at probabilities. So for March, 95% maybe thinking there won't be any cuts, but there's still a possibility at March. 5%. Some people think there might still be a rate cut.
Mm-hmm.
And what that was an increase from 3%.
Mm-hmm.
So possibility in May, 71% think that the Fed would hold. 28% thinks that there will be a cut. That was from 23%. So yeah, there's some sort of move looking at early rate cuts. And on June, where a lot of experts are also saying that there will be a cut. Yeah, 55% of the investors surveyed or professionals think that there will be a cut definitely by June. So not far from happening. Well, next thing you know, we're already in June. So
Mm-hmm.
we'll see how it goes.
Anyway, my first stock is BYDDY or BYD.
All right, BYD. I think Buffett is an investor in this one too, right?
Yes, he is an early investor in BYD, thinking that the CEO is one of the smartest person in the world.
Hmm. So BYD is just some sort of fact is down 10% for this year. Wow, it's 75 billion in market cap, and its price per share is $49.38. Forward price to earnings is 17 times. It's good. It's a little bit of value. What makes you pick this one, Wawi?
Well, it's one of the largest seller of EVs in China,
Mhm.
and it's giving Tesla a run for its money in China.
Is it
Hmm.
it's gaining market share from what I heard, right?
Yes, yes. So
So,
China is the largest market of EVs,
mhm.
and BYD is ramping up its production. And
So,
Tesla is cutting down prices in China, I guess, to catch up with BYD's more affordable lineup.
Right. And if so you believe the BYD growth in the coming year, it's actually cheaper right now compared to the S&P 500 as a whole. S&P is 23.6 times earnings. BYD, on the other hand, is 17 times price to earnings ratio. So we'll just take a look about its financials.
And with its ambition to expand its market in Asia and Europe,
Mhm.
uh, we might get a price discovery here
Yeah, look
if
at that.
that happens.
18 billion in sales back in 2018 to 60 billion in sales in 2022. That's more than double, those quadruple.
Mm-hmm.
Well, almost quadruple. Triple, I would say triple. Triple to quadruple almost. Profitability, let's see. From 400 million to 2.4 billion. So they're making money. Let's see their balance sheet. Cash as of the recent quarter. Cash is around 7.6 billion as of September last year, and debt is $3.9 billion. So very liquid. They actually have 1.4 billion. So 9 billion in cash
Mm-hmm.
and 3 billion in debt. So company is fluid. They have a lot of cash at this point. Pretty good pick right there, Wawi. BYD. And let's take a look at this peers here. By the way, this is from Seeking Alpha. Wow, it's put on side by side to Ferrari. Ferrari is 76 billion.
Nice.
BMW 72 billion. So um
Yeah, Ferrari is another one we might put on our, you know, stocks to watch.
yeah, so BYD is down 10% for the year. Ferrari is up 26%, BMW up 7%, Mercedes 16%. So I think BYD is trailing behind. Maybe it's gotten some sort of a Tesla fever too, because Tesla is not doing that much good this year.
Mm-hmm. It's
Yeah.
on the downtrend.
All right. So what's your next pick, Wally?
Well, this would be probably more of a momentum play if you want to be indirectly investing in Bitcoin. That would be iShares Bitcoin Trust ETF, IBIT, and Fidelity's Wise Origin
Oh,
Bitcoin Trust.
iShares. Yeah, a lot of money is flowing into this Bitcoin trust after they had opened the gates for it to be included in mom and pop portfolios at this point.
Hmm. And some institutional adoption has already started
Yeah, 10
as
billion in assets right now in this Bitcoin. iShares Bitcoin IBIT. $10 billion. That's a lot. No
and
wonder
that's
it's skyrocketing.
yeah, it's just less than a month, and all of this money is flowing into these 12 ETF,
Yeah.
Bitcoin ETF companies that were approved.
Yeah, 62,000 right now. 62,800 for Bitcoin price. What? That's crazy. See?
Uh,
10.1 billion market value right now invested in Bitcoin. They only left $188,000 in cash. So they're 99%, 100% weight in Bitcoin right now for iShares Bitcoin Trust.
yeah, all of them are like spot Bitcoin ETFs, so they just hold Bitcoin. And I'm thinking this will push the second halving much faster,
Mhm.
especially after the news that Marathon is increasing its mining efforts and expanding its mining efforts along with the other mining companies.
Yeah. Crazy, crazy upside in Bitcoin. I surely missed it, but We'll see. Maybe if it crashes to 10,000, who knows? Maybe we'll
Well,
trade
there's
stock for that.
there's 2 points of entry probably, before the halving and after the halving. There might be drops and correction in those 2 points.
Mm.
Um,
So having is like what is like having of Bitcoin. What does it
yeah,
mean?
Bitcoin halving is the amount of computing power necessary to produce Bitcoin. So it's gonna double, the amount of power necessary to compute. Uh,
Oh.
so it's gonna be harder for the miners to do that. So JP Morgan also projected that the this Bitcoin rush might crash because you know the miners may not have enough profit. But if Bitcoin prices keep going up, they're gonna keep having profit.
Mhm.
So let's see how strong this demand is. There's a lot of talk about demand from all sorts of places, from institutions, from individual and retail investors.
Yeah,
So
well,
there's a lot of hype.
yeah, it'll be the halving would be in April, where the rewards would be cut from 6 Bitcoins to 3.125 Bitcoins.
Mhm.
And each of the three halving events so far resulted in price increases in the following months. So last halving took place in May 2020. Bitcoin was around 8,750. 6 months after the halving, price grew 79%. A year later, Bitcoin was up 547%. So it's definitely bullish after the halving event for
Yeah, some
Bitcoin.
analysts take that window as a 10-month window.
Mhm.
But there you go, FBTC is the same thing,
Mhm.
and Vanguard has its own thing also.
Oh, Vanguard
So,
also has one. What?
yeah, yeah,
Oh,
Vanguard, Bitcoin ETF. Yeah. So,
maybe that's why the one of the CEO of Vanguard is retiring. He
yeah,
does
he
not,
could retire. He could retire with all that money, right?
well that so Vanguard has taken the position that Bitcoin is not suitable for its clients. Will that change as crypto ETFs? Oh, well, we'll see how that develops. So looking at the 10-year versus 2-year spread, past 5 days, it actually increased. So in our theory, this should make a sell-off in the market, but actually the S&P 500 and the Nasdaq reached new highs for the past 5 days. So I don't know if anybody is still paying attention to the spread at this point. Mm, but
It's
in
gone down, right? It
yeah,
should
well,
have gone down.
for the past 5 days, it went up quite a bit.
Oh,
So a little bit of tightening happening, but in the yield curve, this is from Guru Focus. So yeah, you
oh,
can
that's what I mean. Yeah, yeah.
it did
The
go
yield
up.
curve is what I was talking about. So it went a little spike there, huh?
It did, but it didn't send any issues or volatility wise. Volatility actually dropped. So I don't know if
Mhm.
anybody's paying more attention now to the volatility or the yields. Well, I guess those people who have been buying bond funds, and they've been diligently buying week by
Mhm.
week since the start of the year. So some charts before we, conclude our weekly review. So this is most of this are from bar chart. They produce really good reviews, summaries. So according to the first slide, S&P 500 has now traded green in both January and February. When that has occurred since 1950, the S&P 500 finished the rest of the year higher, 27 over 28 times, with the final 10 months being higher. 26, 28 times. Seems pretty good for bulls. So just never mind all these numbers, which is very drowsy to look at. But this supports our thesis now. It's
Mhm.
year of the bull. for the
It
S&P
is.
500.
Yeah, very strong bullish trend at
Mhm.
this time.
So some investor trading here, insiders. Apple Chairman Arthur Levinson dumped 100,000 Apple shares for a total value of $18 million March 2nd. So that's well, February 29th actually, when he dumped 100,000 shares at $180 a piece. So he still has a lot of shares, 4.5 million shares, but that's a lot of shares to dump in one day. BlackRock insider chairman and CEO, I think he's also the founder, Larry Fink, dumped 30.978 million shares of BlackRock for a total of $25 million. Maybe he's planning to buy a mansion, another mansion, maybe, in the coming months.
Or a ship.
And then let's see, is that our only, yeah, I guess highlights. And I think Bezos, you pointed out, Wawi, right? He sold quite
Mm-hmm.
a bunch this year, since the start of the year, actually.
Mm-hmm. So there's a lot of money pre-election season floating around.
Mhm.
There's a lot of money there
So
from
this is
these big corporate.
an excellent chart from Barron's and shared by Bar Chart. The largest publicly traded banks with very high concentrations to commercial real estate loans as of this
Mm-hmm.
time. So it's up to you if you want to avoid or try to gamble away on these banks, because one report, one word that they say in advocacy in terms of coverage of loans surely can send their stock price tumbling down to the toilet. Aside from New York Community Bank, of course. So these banks, just take note or be familiar with this Valley National Bank, Columbia Banking System, Bank of Ozarks, Simmons
Simmons.
First National. I'm not sure about how do you WAFD, Access Financial, Independent Bank, Merchants Bancorp, Survey First Bankshares, Dime Community Bankshares. So all these companies are have a lot of exposure in terms of CRE over capital, CRE growth, real estate growth
Yeah,
over
that
50
was Washington, uh, Washington Federal Bank.
Washington. And I know Axos actually lent Trump to buy some of those properties when Deutsche Bank dumped their relationship. Axos was the
Mm,
one who picked up the tab for Donald Trump. Look at that, 400, 300. That's a lot of exposure.
360.
So
Hmm.
one wrong move is dangerous. Another chart from bar chart. Consumer sentiment posts largest intra-month drop since March 2020. Wow, I didn't know that. So a lot of negativity in the consumer sentiment market, Wawi. One thing to watch
Mm-hmm.
out for.
Yeah, it's getting harder for people.
Hmm. Plus the study about home prices. We have now reached an all-time high, according to Redfin, in the house prices nationwide.
Mm-hmm.
Okay, another helpful chart from bar chart. Almost 73% or three-fourths of the S&P 500 stocks are trading above their 200-day moving average. So this is what we have been highlighting. There is more breadth now that supports, that gives fundamental support to the rising stock market. It is not just all hype. It says here, but twice in the last 12 months, the breadth was actually slightly stronger when S&P was much lower. The conclusion, the largest stocks are leaving the rest of the market behind. So regardless of the increasing breadth, the conclusion is still the largest stocks are leaving the rest behind. Yes, there's some point to that, but in my opinion, it gives some sort of support. The put call ratio, lowest level since December 28, 2021. Wow. So it's not only getting lower, but it's the lowest since September What happened to the S&P after 2021? I think that was when the tech sell-off, right? 2021.
Oh,
Yeah.
I don't know. I can't remember that far.
Yeah, December, and then
Oh.
it's sold off. It lost 24% until September of the following year. So if history is any guide, well, we're not saying that the market was sold off. We have a lot of fundamentals that supports the market. You don't want to base your investment just because of the put and call option, but it's good to know. There are some warning signs right now. Let's see, another screenshot here from Bloomberg. China stocks see largest weekly outflow since October, since Bank of America. Yeah, a lot of investors hate China right now. They're just not sending money. They're actually pulling out of
Mm-hmm.
China at this point. And I guess this is one of our last screenshots here. Contrary to what we think of early cuts, Apollo, I think this is Apollo Global, Slock says Fed will not cut rates in 2024. Chief economists flag surge in US growth, sticky inflation. Fed will spend most of it 2024 fighting inflation. Honestly, I think Huawei, this is contrary. The Fed is done. I think
Mm-hmm.
it's monitoring where the PCE is going right now.
Mm-hmm.
Uh, Honestly, I'm contrary to that. How about you, Huawei?
Yeah, I think so. I think the supply chain has stabilized, except for that area in the Red Sea that, prices is gonna stay up because they have to reroute those ships. But I think the supply chain is stable. So it's, if you look at the bigger picture of supply and demand, I think, uh, there's an ability to meet the demand right now.
Mm-hmm. Yeah, I'm trying to find like a good chart for PCE and here we go. Hopefully this is one of the latest ones. September 29, 20. Well, regardless, we got less than a minute to go, and we thank you again for tuning in. Please hit the like and subscribe button. Thank you so much, Wawi, for making this happen. Any words to part with our listeners before we end?
Stay put.
Stay put, stay invested.
Don't
Right, guys.
forget, things always change for the better.
That's true. We believe that. And thank you guys for tuning in. Again, this is Mark Yu signing out.
And Wawi Satos signing out.